We've seen a year ago was when everyone has so much anticipation of exiting COVID-0 and what this recovery in China would look like. It hasn't panned out as what most would expect. How would you assess the recovery now?
Well, the recovery definitely has not been a V-shaped sharp rebound come out of zero COVID. So that's been a disappointment. But Chinese authorities have been very focused on getting the economy back on track, and they've been a flurry of policy actions since the beginning of the year. I think slowly and surely those policies are going to have some effect. And at this point in time, I think there's a lot more to come, because unlike many other countries, China still has a lot of wiggle room in terms of policy, because inflation has been very low. Mm-hmm. So that means monetary easing, a long way to go, and even fiscal stimulus, has a bigger room.
Have you seen enough from policymakers to maybe restore a bit of confidence among maybe the people and the clients that you talk to, or do you think more concrete measures are still needed right now?
Yeah, definitely. I think it has been, China has done enough, has done a lot, but it's not enough. Okay, there's still a lot more. Just today is 19 trillion. GDP, so it's a soup tank, right? It takes more to turn, and so China definitely has to do far more, in particular to lift confidence, consumer confidence, and the investor confidence.
How would you assess overall just the fundraising environment now when it comes to private equity then in China?
Well, it has been tough, but it's not China-specific, nor even Asia-specific. It's global, right? We have rising interest rates, rising, global inflation, recession concern, sluggish public markets, a drought of IPO exits, and dwindling M&A volume.
Yeah.
So of course it's been a difficult fundraising environment globally over the last few years.
You got to talk about the geopolitics involved in it, right? When you have the U.S. and China both doubling down on capital curbs and export restrictions, how do you see these geopolitics playing out? I mean, are we likely to see more constructive relationship between U.S. and China moving forward?
Right, geopolitics has been so vicious for the last few years, right? That it really has, created the single most important risk for global financial system. Mm-hmm. Having said that, I do see some early signs of, at least, let's talk, right? Instead of just the shouting match across the Pacific. So once you talk, engage, you realize, it's not, just black and white, of this very nuanced, complex relationship between the two superpowers. So
you were just in the U.S. and Europe, speaking with people there. I'm just wondering, how has sentiment changed at all when it comes to perceptions of China here right now? Are we seeing signs of foreign interests coming back, or at least looking at dipping their toes back into China in any way?
Well, definitely, so it's not possible for anyone to ignore China, right? This is the, it's like 19 trillion US dollar GDP, still the world's biggest manufacturer, still world's biggest, trading economy. So you have to look at China, but the opposite people are held back by the mounting uncertainty of geopolitics, but also domestic politics in both countries. But having said that, I think, sentiments, have slowly but surely on the mend, improving. But, still that of unknown. I think people now at least are making trips, to China, right, to see themselves instead of just relying on media, which actually make a big difference.
We're talking about deglobalization in a panel right now, right? This whole theme of de-risking China plus one. I mean, does Primavera have any plans to diversify away from China right now?
So first of all, it's only Nordics, type of deglobalization, right? We have benefited as a world. We have benefited so much in so many ways from globalization. Of course, globalization has its downside risks, but to stop it and reverse it is just crazy. Of course, we have to do our best to diversify, to de-risk, but we're still hopeful. Global integration, whether it's trade, investment, and technology, and people will very much continue.
Yeah, one of the questions I think was going to be asked at your panel later on this afternoon is where are we when it comes to the drags on this economy, right? Property, certainly we're still in a bit of a crisis mode there. Do you see other growth drivers in China? In particular, you take a look at the tech innovation out there that can really offset some of the weakness in the property market.
Absolutely. Right now people are just very focused on property, which is a big, challenger for China. But China is much more than just property, right? It's the consumer economy, right? Still, in terms of services, healthcare, even consumer spending, still, reasonably okay. And I think it's going to get stronger as confidence comes back. Mm-hmm. The other is climate action. Okay, China is the undisputed global leader in climate, whether it's renewable investments or EV and batteries, and there's so much going on bottom up, innovation, and so that's I think really the many bright spots.
And sort of maybe in the tech, I know you're a big investor in tech. I'm just wondering, what are some of the key themes you're watching out for this year, or even just next year in particular? I mean, AI certainly is a big buzzword out there. How do you see AI playing out in China and versus this competition that we're seeing in the U.S. too?
Well, definitely, AI is, China has a huge potential, and there are many startups, in the generative AI space, but also there are some other big tech companies like Alibaba, Tencent, and ByteDance. They continue to invest in R&D and and really provide more AI capabilities. So that is definitely a big thing. The other is the innovation is in the climate, where again the renewable energy, latest generation of solar, wind, and EVs and the batteries. So I said that China is undisputed global leader, and so that many exciting opportunities in the climate space.
Overall, what do you think is going to be reasonable growth for China then? I mean, if 5% is an easy target this year for growth, is it going to be an easy target, you think? And what do you think about next year and maybe the next 5 years?
I wouldn't be so easy because China today is so big, right? The per capita GDP is at a much higher level. So that kind of double-digit growth, of course, is behind us. But the 5%, if China can manage to deliver consistently, over a period of time, not just this year, struggling to get a 5%, or maybe next year, is really able to generate, 5% plus minus consistently over the next 5 to 10 years. Then, China will be still the single biggest growth engine for the world economy. And of course, there'll be many, wealth creation and investment opportunities as well.